concessional superannuation catch-ups that was pretty much introduced effective from last year, really, from 1 July 2018, where you don't put in the full $25,000.
So the concessional contributions, Simone, they're the ones where you don't pay personal income tax on that.
That's correct.
And if you do it yourself, you can actually get a tax deduction for it.
That's correct. And that includes your employers, the employer SGC. So
yes, the 9.5%. Yeah.
The 9.5%. So you're allowed to put in $25,000 a year combined with all those things. And pretty much usually the cap, that's it. But they brought this rule in from 1 July 2018 where you don't meet that cap. You could start from last year catching up if you've got funds, and you can claim a tax deduction for that.
Yeah.
Of course, there's a few rules around it. Balance has to be less than $500,000. Obviously it needs to be suitable for your strategy, things like that. Yeah. But that's one that we look at.
One of the, those concessional contributions that you get a tax deduction for, as long as you've got the cash flow and you're comfortable locking some money in superannuation, which is a great investment vehicle. It's one of the best ways to manage your personal income tax, isn't it?
It really is.
Tax.
It really is. I mean, super's so concessionally taxed. It's 15% in, and the top marginal rates are 45%. And 2% Medicare levy. So, and then even the lowest rate's 19%, which is still higher than 15. So, and you can get a tax
so we've got these concessional contributions, and the catch-ups enables us to go look back, and if we didn't use up our 25,000 in previous years, we can grab those and top up our super.
Yeah. And they last like kind of 5 years. So you can still plan to sort of, even if you haven't got all the cash flow now, you can kind of plan it out for a couple of years, things like that. Yeah. Be a good idea.
So like to give it as an example, Simone, so if for example, I put in $10,000 of my employer's 9.5% had gone into superannuation last year, that means I didn't go up to the 25,000. I had 15,000 that I didn't use.
Yep.
And this financial year, I also got my 10,000, but I happened to have saved up a bit of money, or I maybe had a tax event like capital gains tax or something like that, where I wanted to reduce my taxable income by more. Then I could not only top up this year's contribution by 15,000 from 10 to 25, I could also use last year's 15,000.
And possibly the year before.
And possibly the year before as well. So,
and that's,
so there's definitely opportunities to look at that. Really importantly, I think we've been finding, you have to be really clear about what your previous super contributions were.
And the balance as of 30 June last year of your balance too.
Yeah.
If your super balance is over $500,000, you're not eligible.
Yes. And also checking how much contributions you've made in every fund, in every year, going back to what?
In every year.
How
from
far back
1 July 2018.